Hello and welcome. You're tuned into CNBC-TV18. This is our special broadcast. Reliance's Q3 numbers are out and their profit number has come in this time around higher at 18,645 crore rupees, which is higher both on a quarter-on-quarter and on a YOY basis. Remember, it was expected to be a strong quarter for Reliance Industries led by their oil to chemicals business, and the retail business was also expected to do well because of the festive demand. Jio would see some improvement because of high subscriber growth and some tariff hikes as well. So all in all, expected to be a strong number, and that is something that we can see in the performance as well. In fact, the EBITDA this time around, that number will come up for you on the screen, has come at 46,018 crore rupees, and this number is at a 7-quarter high. So that's the kind of performance that we've seen with Reliance this time. The profits are higher on a quarter-on-quarter basis as well. Now, do remember, you'll see Q1 profit to be way higher. That is because of the stake sale. But other than that, on a consolidated basis, the numbers look very strong. But point. Retail, Mangalam.
Yeah, you know, the retail business is doing extremely well this time around. 97,912 crores is what the company's quarterly revenue is. This compares with 90,351 crores, which implies that the retail business has risen by high single digits, a little over 8%. And that's pretty much par for course, given the fact that, you know, the festive season this time around was spread over 2 quarters as against just 1 quarter same time last year. And also the company has demerged their consumer products business. So that has been taken into account for the base as well. So if you look at, you know, just a relative performance for their retail business, a high single-digit growth in this environment at a time when the GST-related price rationalization has happened as well is definitely a positive. Retail EBITDA too has seen a jump from, 6840 crores all the way up to 16,915 crores, telling you that the margins of the retail business over 7% have been steady as she goes. So the retail business continues to do well for Reliance. High single-digit revenue growth, the EBITDA margins stable, the EBITDA stable as compared to last year as well. And this despite an unfavorable base where festive season last year was concentrated in the 3rd quarter as against this year where it was spread across Q2 and Q3. And the performance that we saw despite the demerger of Reliance's consumer products business. So all these factors taken into account, good thumbs up for the retail business too.
And that's the case for oil to chemicals business as well. Now, do remember Singapore GRMs, they were up 100% on a sequential basis, and that shows in the numbers as well this time, right? The O2C business EBITDA has come in higher at 16,507 crore rupees. Even if you look at that number and compare it with the previous EBITDAs, that too again is at a 7-quarter high. So both consolidated EBITDA and O2C EBITDA has come in higher. O2C margins also have come in at a 7-quarter high, 10.2%, which compares with 9.4% on a quarter-on-quarter basis. And if we look at it on a YOY basis as well, that number is higher. Yes, oil and gas business did see some decline, but do remember deep water prices, the gas prices, they have been lower. And that is something that you're seeing in the margins as well for oil and gas business. Their margins have declined to 83.3% versus 87.4% on a YOY basis. In fact, we do have Sunny Agrawal joining in from SBI Securities with a quick take on Reliance's earnings this time. Sunny, what did you make of the numbers? O2C looks like a beat, so does retail, and overall EBITDA has come in at a 7-quarter high as well.
Yeah, good evening, everyone. I think broadly numbers seems to be very strong. To be very honest, I have not gone through the press release. If you can just repeat the numbers for retail and telecom business, it will be really helpful.
So we're still awaiting details on the telecom business, Sunny, but for retail, what we have right now is a revenue growth of 8.5%, 97,912 crores on the retail top line. The retail EBITDA is 6,915 crores. This compares with a number of 6,840 crores. So it's stayed stable year on year. A marginal increase of 1% is what we've seen. Margins for the retail business have been 7.1%. This compares with 7.6%. Over the last, I think, 7 or 8 quarters, you know, the retail business margins have been hovering between 7 and 7.8% odd itself. So no real problems out there. The retail revenue up 8.5%. Sonal, you want to fill him in on the O2C and other numbers?
Yes, Sunny, so oil to chemicals business has been very strong as well. The revenues have come in at 1.62 lakh crore rupees. If you look at the EBITDA number as well, 16,507 crore rupees, that number is at a multi-quarter high, 7-quarter high to be precise. O2C EBITDA margins have have come in at 10.2% versus 9.4% on a sequential basis. And if we talk about the oil and gas business, that is where we've seen some weakness, which was quite expected actually because of the macros that we have seen with deep water gas pricing, which is lower by around 3 and 4% on a quarter-on-quarter and on a YOY basis. Margins there as well have come in at 83.3%. And we do have the oil and gas EBITDA, which has come in at 4857 crore rupees. So some weakness in oil and gas, but strong showing by retail and O2C segments this time. Sunny, over to you.
Yeah, definitely. I think, again, in line with expectations, so upstream business was supposed to be slightly drag on overall performance because of weaker crude oil realization. However, as expected, because of a very strong GRM, which we have witnessed even in the case of MRPL, so seems that business has contributed very well in terms of growth for this quarter. Retail, only one concern which I feel after reporting a 2 quarter of very strong double-digit top-line growth, seems this quarter we are again back to a single-digit top-line growth. But again, the margin expansion is something which had definitely aided in EBITDA growth as such. Overall, seems a kind of mixed bag kind of number, however, in line with our expectation.
Sunny, the question is, the stock has been underperforming, at least since the start of the year. Reliance Industries share price is down nearly about 7-8%. Is there enough in the numbers for the stock to reverse its underperformance? How do you expect the stock to move in the near term?
I think, again, all the negatives are already in the price, and we continue to remain constructive on the business, predominantly led by likely unlocking due to the IPO of its retail and digital business. So that can lead to a re-rating on the retail side. Another important aspect is ahead of IPO, we may see a kind of increase in telecom tariff. So that should again aid in a better margin for the telecom business. So overall, if you look at the sum of the part, we believe the retail and telecom business together should constitute closer to 1,200 rupees per share value. And oil and gas business, which include both upstream as well as downstream business, should constitute kind of 500 rupees per share value. And if you ascribe total other, if you ascribe value to other businesses, which includes the investment in the new energy business, we believe that's closer to 250 rupees. So we believe the fair value of the business, if somebody can hold the stock in a portfolio from 12 to 18 months perspective, is closer to 1950 rupees. Yeah. So again, I believe,
yes, Sunny, that is what, yes, 1950, that's your target in Reliance Industries, and right now it's trading at 1457. The stock did hit a record high of around 1611 on 5th of January, and it has retraced from those levels. Sunny, you spoke about the new energy business as well, and you have ascribed a value of 250 rupees a share on that one. Some of the capacities are expected to come in this year itself. What kind of contribution are you expecting from that business? Is there a trigger which could be seen in financials in FY27 itself?
I don't think so. So just to correct, 250 rupees is not the entire value for new energy business. That includes other investments also. So what we believe is that new energy business should start contributing beginning FY28 or 29 meaningfully, not immediately from FY27 or 28. So maybe slightly away, maybe right now we are valuing the business based on the investment. So 2-time price to book is something which we are ascribing to the new energy business.
And what's the multiple that you're ascribing for the retail business here? You've given us a SOTP valuation, but if you could give us, the assumptions on which you've ascribed that value?
So again, on the retail side, we have ascribed the value in terms of EV/EBITDA multiple 28 times Mangalam, in line with other retail major which are trading in the market in terms of cluster.
All right, 28 times the EB to EBITDA on the retail business. And when you say that you're looking forward to some sort of value unlocking coming by in both the telecom and the retail businesses, what's the nature of that value unlocking that you are expecting in your model? Because if it was supposed to be, a situation where the current listed entity is a holding company, then at some point there would be a holding company discount as well, right? So how do you account for that?
So when we ascribe the 600 rupees value per share for this, 1200 rupees value per share for this entire retail business, we have ascribed a 20% holding company discount also. So I am telling this value including a holding company discount.
Got that.
Okay. Sunny, also wanted your take on the oil and gas business because, the production coming in from there is huge. It's almost 30% of the consumption that the country does, right? Deep water gas prices have been lower. Do you expect some recovery come by in the gas space overall, gas pricing, gas production? Is this a space which you think could start contributing very soon again, or there'll be some time before we see that?
Again, I think overall environment seems to be slightly benign for entire oil and gas industry. So as the crude oil prices continue to hover closer to $60-65, and even globally, if you look at the gas prices, they are continue to remain under pressure. I think it will take some time for upstream business to start contributing meaningfully. I wanted to keep in mind that as we speak, closer to 50% of EBIT is coming from consumer-facing business, whether it is retail or telecom. And as we move ahead, I think the growth driver will continue to remain the consumer-facing business. And over the period of next 2-3 years, you should see the contribution of oil and gas, including upstream as well as the downstream business contribution should reduce going forward. So I think ultimately the growth kicker is the consumption as a segment, and that is something which Street will looking forward to.
One thing that the Street would have been looking forward to is some of the internals that have come in from the numbers. So the press release is out. Sunny, I'm just reading some of the parts which are relevant to the retail business here. They said that the business delivered a steady performance of 8.1% growth. Importantly, I'm looking at their store additions, and they've added about 4.6% jump in the stores from 19,102. Now the total store area is around 19,979. With the area which has increased by just 1% from 77.5 million square feet to about 78.1 million square feet, which means that the revenue per square foot has actually increased for Reliance Retail, and that's as against all the other players, including the likes of Trent, etc., where the revenue per square foot has come down. That explains the operational resilience for Reliance Retail. They've added 431 new stores. The registered customer base increased to about 378 million. And if you look at the grocery business here as well, key categories, dairy, frozen bakery grew about 23%, staples grew by 19%, packaged foods grew by 15%. We also saw a 40% growth in namkeen, 32% growth in chocolates, etc., given the festive season. Jio Mart did extremely well. And, the other parts of the business, including the likes of Reliance Jewelry, which grew about 13%, AGO Lux grew by about 41%, and consumer business as well did extremely well. All of this is not taking into account the Reliance consumer business, which was demerged this quarter. The quote that has come in from Isha Ambani, she says that it is a steady quarterly performance by prioritizing trend-focused assortments, seamless omni-channel experiences. They believe that the business will continue to do well going forward. Any other details that you have, Sonal?
Go ahead.
On Jio, we don't have the revenue or the margin performance, but what we do have are the internals. Subscribers have crossed 515 million subscribers, which means on a quarter-on-quarter basis, it's an addition of 8.9 million subscribers year-on-year, about 33 million subscribers. Now, 515 million subscribers in Q3 is higher than estimates. The Street was working with 6-7 million subscriber addition. Sequentially, the company's done 8.9 million. So that is a positive. ARPUs have come in at 213.7, 213 rupees 70 paise. That's a modest increase of 1.1% on a quarter-on-quarter basis, 5.1% on a year-on-year basis. But this has come in line with expectation. In the absence of a large tariff increase, the increase in ARPUs for the company has been very, very modest. Every quarter it's been going up by 1%, 1.5%. It's basically happening by migrating from 4G to 5G, moving from the Jio phone users to 5G, premiumization. So that's been driving the ARPU increase. But till we get a big bang tariff increase of 10, 12, 15%, we will not see that step jump in the company's ARPUs. But for Jio, in a nutshell, subscriber numbers better than estimates. ARPUs have come in line with estimates.
Okay, all right. So it has largely been in line. Retail has done well. Jio, as Rima just explained what the numbers look like. For oil to chemicals business, as I pointed out, it has been very, very strong. The company additionally has also expanded their fuel retail operations. It is up in terms of their network or the stores or the outlets. It's up 14% on a YOY basis. And overall volume growth for petrol has been 20.8% in terms of sales and 24.7% in terms terms of diesel. So this is a segment we don't talk about much, but this has also been driving growth for the oil to chemicals business overall. If you talk about their cracks, the company says cracks have been very strong across the board, be it diesel cracks, be it petrol cracks, or the ATF cracks as well. They're up anywhere between 38 to 90%. So Sunny, come in on this, because we are seeing a lot of changes, a lot happening geopolitically, right? Be it Venezuela, be it what's happening in Iran. Do you think that is something which could put pressure on cracks going forward? Or do you think refining margins will continue to be strong?
I think, again, as you rightly pointed out, because of this geopolitical tension, there can be some disruption in terms of the cracks which are likely to be enjoyed by all these refining businesses. But again, let's hope that, this is all temporary in nature, and going forward again, once this trade uncertainty reduces, maybe FY27 is a year, maybe second half, where we may see again normalcy returning back to the spreads into O2C businesses. So I think maybe short-term drag is likely because of this ongoing geopolitical tension. Maybe, but in a longer term, I think business should return to normal for this oil and gas.
So you think Q4 could be volatile, but these elevated margins that we saw towards the end of Q3, they could normalize a bit. Is that what you're saying?
Yes.
Okay. All right. This is about the O2C business. The retail business has done really well, and Mangnam just highlighted how there has been strong store expansion, and this is something that we saw in their retail outlet as well. The ARPU growth has been strong. The subscriber growth has been strong too. So we'll just get in some more reaction. But before that, Mangnam, anything to add on the retail side?
Well, one of the most exciting consumer prospects for Reliance Retail this time around has been Shein. Right, when they brought over Shein, and they were expecting the value fashion part of the business to do extremely well. And they've given some color on that. It's seen 6.5 million app downloads or app installs, which is fairly positive. AGO Rush has reached about 420 pin codes. And at the same time, if you look at the Reliance Quick Commerce verdict as well, that's been extremely strong. So JioMart, which is their quick commerce business, has actually seen an exit daily orders of 1.6 million users, or 1.6 million orders per day, and recorded 53% growth quarter on quarter and over 360% growth. Obviously, this is on a favorable base, year-on-year growth. So Reliance is now making its full-blown foray into quick commerce as well by increasing the dark stores that they have. So JioMart has shown a 360% growth year-on-year, as against the industry, which is growing at over 80 to 100% every every quarter, year-on-year. 360% growth on Reliance's base. Obviously, they are scaling up their quick commerce business, so everyone will watch out for this one as well. Shein and quick commerce doing well.
Indeed, Piyush Pandey, research analyst, Centrum Broking Limited, is now joining in. Piyush, unfortunately, don't have the revenue, EBITDA, profits number to share for Jio Infocomm, but we have the subscriber numbers, 515.3 million in terms of subscribers, while the ARPU, the average revenue per user, has inched up by 1% to 213.7. How does this compare with your estimates?
Broadly, I would say numbers are in line with estimates. So increase in ARPU by roughly close to 1% sequentially, and this is primarily to do with higher FW addition. Their customer addition has been on the higher side, so roughly they have added close to 9 million customers. But I think the concern has been muted this ARPU growth, and we expect that companies will be taking some tariff hike by the end of this quarter, or maybe in 1 or 2 quarters. So that remains a key concern for Jio, like how they want to drive the ARPU growth.
But the ARPU growth will come in only when there is a large tariff increase, right?
Yeah. So see, Bharti Airtel has been more successful in driving ARPU increase quarter on quarter. But for Jio, I think except tariff increase, that increase has been very, very muted. If you see for last several quarters, so this quarter again, just 1% increase in ARPU. However, the increase in number of customer base has been on a much higher side, like we've been sustaining over the last few quarters.
Okay. All right. Take that point. Let's get in Gurmeet Chadha into the conversation as well. Gurmeet, thank you so much for joining in. So just taking you through Reliance's numbers this time, Alto Chemicals business has seen a strong growth. If we look at the overall numbers for Reliance Industries, EBITDA consolidated basis has come in at a 7-quarter high of 46,018 crore rupees, margins at 17.4%, profits at 18,645 crore rupees. The retail business has seen a growth of 8.5% on a YY basis, which is led by the festive season, the demerger of Reliance Consumer Products and GST rate rationalization, and average revenue per user is up 5.1% on a YY basis, and it's a strong 7-quarter high growth, 7-quarter high EBITDA for even Alto Chemicals business. What's your take? Do you think this is something which would reverse the underperformance that Reliance stock has seen over the last couple of days?
I think the numbers are pretty steady and largely in line. I think I would have probably be happier in case the ARPU would have been slightly better. So obviously their user base has grown at almost 51.5 crores now. So what the street would want to see is how much can they bridge the gap on ARPU with Airtel, considering that Jio also has a listing sometime this year. They are targeting H1. So I think that could be one big trigger of value unlocking. I think the numbers are largely in line, and probably the retail margins are slightly lower from the first cut. Whatever little I've seen, there's a minor drop there, and OTC is better because of Singapore GRMs, and that was expected. So I think largely in line, and I think the big trigger for the stock more from a larger move would be the Jio IPO unlocking and a slightly better growth in ARPU.
You're saying that, Gurmeet, the investors would want to see Jio's ARPUs closer to Bharti Airtel's ARPUs. But Bharti's ARPUs are well in excess of 250 rupees.
Yeah,
There's still quite a gap between the two. And if there is a tariff increase, we know that all of them will take it. It will benefit the entire industry.
Correct. So I think the bigger increase obviously will come through tariff hikes. Also, I think the number of data plans and the range of data plans has seen some change, and that should probably sequentially reflect. But from a re-rating the stock point of view, and obviously the IPO as and when it comes. Second is a bigger, slightly. So right now the gap is 40-50 bucks, 213 versus let's say 256, right? Secondly, as I said, the retail is, to me, the retail numbers look a little softer from a margin point of view. Could be due to GST and other things, but the entire court was there to play out. So I have to look that in more detail to give you a better color there.
Right. Have you had any, view on the Reliance retail business so far? 8.5% revenue growth, EBITDA margins at around 7.1%, strong growth across segments, and now they're foray into quick commerce as well.
Yeah, so quick commerce, I'm not sure. Foray would. I mean, it's a very long haul, and this business, if I can use that word, requires a very different DNA as far as quick commerce is concerned. But as I said, I would probably want to see the new age business do a little better than what we are seeing in terms of sequential improvement. Pure from a stock. If I can use re-rating point of view. So one obviously is value unlocking. One is probably now the news business should start contributing more than the traditional business in terms of growth.
Gurmeet, that's about the retail business. For the Alto Chemicals business, that definitely has been strong because we've seen the refining scenario being very strong. In second week of November, we did see record high diesel cracks that happened with MS as well. But it did come off a bit. And now we are seeing a lot of geopolitical concerns around the globe. We are seeing some news coming out of Venezuela. Then there's Iran. Do you think this is something which could keep refining cracks under check?
It doesn't look like. In fact, if they are allowed, as and when, on Venezuelan oil, that comes in, their refinery is far more complex and designed to manage heavier crude. So I think the OTC business will continue to be steady. I think, especially in an environment like this, with mix changing, Reliance is far more agile with far better complex and refinery to manage all of that. So I think O2C business will continue to do well in my view in the near term, the way things are. But as I said, I would want to see more new age businesses do much better than what they are doing. I think if with 51.5 crore subscriber base, you would want to see a larger jump in revenue and And so one is, maintaining subscription market share. Second is maintaining sustained growth in revenue market share. And I think that will come when you will see a little higher jump than 1% quarter on quarter as far as ARPUs go.
Yeah, it's been a 1%, ARPU increase now for 4 quarters in a row. This quarter, 1.1%, the one prior to that, 1.2%, the one prior to that, 1.3%, and the one before that was 1.4%. It was only before that there was that spillover impact of the previous tariff increase. Gurmeet, so the final question is, on Monday, how does the stock react? And what is the near-term trajectory on Reliance Industries, considering its underperformance from the start of the year?
I think purely from an earnings point of view, there is no disappointment, at least, as far as what is right now available optically. And I think the stock has been under news for different reasons. Some report on sanctioned Russian oil coming, and then, different reports coming which were later denied. So I think hopefully should be a positive reaction, much needed. As I said earlier during the day, we have like 25% Nifty earnings between today and tomorrow. HDFC and ICICI also coming. I think Reliance is out of the way, very steady. Hopefully the banks also follow through. And I think it's there's no disappointment from a market point of view as far as revenue and earnings. So there's no positive surprise, but the numbers are in line.
Okay, all right. Thank you so much, Gurmeet, Sunny, and Piyush, for joining us today with your take on Reliance's numbers. If you have just tuned in, Reliance reported numbers a while ago. It has been a steady set. Auto Chemicals business reported strong numbers. So did retail business with an 8.5% growth. Consolidated EBITDA has come in at a 7-quarter high for Reliance Industries. Their profits have increased on a quarter-on-quarter and on a YOY basis to come in at 18,645 crore rupees. The average revenue per user for their telecom business is up 5.1% on a YOY basis. Digital services revenue is up 12.7% at 43,683 crore rupees. And they've also seen strong growth in their fuel retailing business, where outlets grew 14% on a YOY basis. The stock has underperformed this week and last 1 month, down around 8%, but did hit its record high on 5th of Jan of 11.8 rupees a share. But of course, the analysts are expecting a positive reaction on Monday. So watch out for that one. But thank you so much for tuning into this special edition of CNBC-TV18 earnings. Thank you for tuning in. More news and updates come on the other side.